Next is our Secretary of the Treasury, JMendez.
Thank you very much. Thank you very much. I know, during these days, not too many people want to hear from the Treasury Department, but we certainly are glad to be here and share some time with you. And in addition to that, to bring you good news. I know that the governor would not forgive me if I do not share with you certain statistics that he's always on a daily basis looking after. As of the close of business yesterday, we have filed 145,000 more tax returns than in the prior year. Out of those 284,000 tax returns, out of the 500, we have over 50% of the tax return expected, 516,000. Out of those, 284,000 have been filed electronically. And better news, out of those electronically filed, 260,000 tax returns have been processed with a tax refund, amounting to $221 million that are back in the pocket of the taxpayers. For those bankers and investors, we also have good news, not in the form of tax refunds, unfortunately. Due to the conditions of the books and records that we found when we originally came into the administration, it took the administration 16 months to file the comprehensive annual financial report. I'm glad to report that for this year, as of the close of business of June 30th, 2010, we will be filing our CAFR, our comprehensive annual financial report, on time. It will be filed sometime before the end of this month. And further than that, we will be setting ourselves a target of having it filed by the end of December of 2011. So we will commit, and we have delivered the transparency that we promised. Going now into the specifics regarding revenues, in spite or in addition to having started the first phase of the tax reform that reduced dramatically the tax rates for the year 2010, our revenues show that for the year 2011, this is up to February 2011, our tax collections remain within our estimate, and in spite of having a tax reduction implemented in December, where there were no withholding made to taxpayers or to salaried employees, either on the salaries and on their Christmas bonus, the difference is a very insignificant amount as compared to prior year for the same period. We have also increased our sales tax collections. We're up to 3.3% during this fiscal year. This includes March. We have seen a significant increase in collections, mainly due because of additional disposable income in the hands of the consumers and merchants, and also because of our stronger compliance efforts. I want to bring your attention to the line on the graph that shows the increase on a year-to-year basis, on a monthly basis. For the month of March, this past March, we showed a significant increase of over 8% as compared to March last year. We also want to bring your attention to the line on January of last year as compared to this year. It shows a 4.5. If we account for a non-recurring collection that we made due to a settlement that we did with one particular customer, the increase of this January's collection versus last year's collection would be close to 9%. So we are seeing a pattern of a significant increase in collection of the sales tax. In terms of the new implemented excise tax under Act 154, we have so far received 2 payments, the one that was due in February 15th, the one that was due in March 15th. We have seen a significant increase. Obviously, we have to see the pattern as it develops, but certainly it is meeting our expectations, especially if you take in consideration the sales that were, export sales that were booked in November and December of 2010 that certainly reflect an unusual amount of export sales before taking effect the excise tax. So what we expect to see is the normalization, stabilization of collection throughout the rest of the calendar year. The excise tax, for those that are not familiar, is a temporary measure, and it will be gradually reduced until 2016, where it will be then eliminated. The rate applicable to the excise tax is also phased down dramatically. And for the calendar year 2011, the current year, we are estimated that we will be collecting $1.4 billion. To give us more comfort to us, as well as to the entities being impacted by this excise tax, on March 30th, the IRS, the Internal Revenue Service, issued a strong guidance stating that they will not challenge Act 154. That certainly validates our assumptions on when the tax was originally imposed, and give us a lot of certainty in terms of the predictability and in terms of the consistency that we will be receiving those revenues. In terms of the tax reform, the one that was the first phase was implemented in December 2010. The second took effect on January 2011. On 2010, we provided a credit to individuals as well as to corporations. Individuals can benefit from a 7%, 10%, or 15% tax credit against the tax determined on their tax return. And obviously, we see that one of the patterns that we see is that as taxpayers can benefit from those tax reductions, they have been encouraged to file their returns earlier, and we are able to collect, obviously, those tax assessed more promptly. The tax reform in general terms, as compared to prior tax reforms, the one in 1995 provided a relief of $400 million as compared to the current tax reform that basically provides 3 times the relief that 1995 tax reform provided. If you compare it to the 2006 tax reform, which contrary to providing relief, basically increased the burden by $180 million. This tax reform will provide additional money in the pocket of our taxpayers, our citizens, our corporations, in the amounts of $1,200 million each over the next 6 years. The tax reform provides tax relief for individuals and corporations. In terms of tax for the individuals, as I said before, for the year 2010, will provide an immediate dollar-for-dollar credit of up to 15%. In the case of corporations, it does provide a 7% tax credit against their tax liability for the year 2010. Commencing on 2011, the tax withholding tables have been reduced so that we can see all salaried employees as well as those professionals that file their estimated tax returns. They can benefit immediately from those reductions in the tax rates. It promotes economic development and job creation. We have also included in the tax reform not only a reduction in the tax rate for corporations, but also we have extended the carry forward loss period from 7 years to 10 years. So those companies that have undergone a very depressed period, they can recover from those and continue to expand their businesses and create jobs. The reform also simplifies the tax system. The tax returns are going to be a lot simpler, especially if you process them through the electronic form. So it will simplify our processing and provide us resources to strengthen our compliance efforts. In general terms, as a summary, you see here the average tax savings by individuals, that it goes steadily up from the year 2010, that averages 11%. Up to close to 50%, 49% on individuals. So it's a significant reduction in the tax burden of all the individuals. Obviously, this will raise disposable income and therefore will help us as well to make up for those reductions through the collection of the sales and use tax. In terms of corporations, it reduces dramatically the maximum tax rate from 41% down to 30% up to the year 2014, when it comes down to 25%. This has significant effect on our economy. We have more competitiveness, and it will place Puerto Rico in a stronger position to compete as a location for jurisdiction for international companies to place their business in Puerto Rico. Before the tax reform, we were located on a position, spot number 24, in terms of a maximum tax rate. This will jump Puerto Rico 15 spots up to position number 9, as compared to other of our main competitors. To implement this tax reform, we did do it with in a very responsible manner. We have set up, as the governor mentioned, certain criteria to make sure that we are staying the course, and effective 2014, we will measure where do we stand in terms of expense control, revenues, and economic growth, to make sure that we are on the right track and we can continue implementing the next phases of the tax reform, the next benefits. We have also set up a reserve of the first $500 million of any budget surplus for the next years, so that we can set up a reserve for rainy days in the future, so we don't fall in the same spot that we were when we came into office. To complement the benefits of having a lot lower tax rates and a much equitable and just tax system, we will complement that with a very strong compliance effort. One of the most significant measures that we are implementing is the sales and use tax lottery. The sales and use tax will help us in monitoring and collecting those sales tax that we are all aware that have been outside the system, and to make justice not only for the consumers that are paying the 7%, but also to merchants that are undergoing not legal competition, not a fair playing ground, when their main competitors can afford to sell their products at lower prices because they're not collecting the 7% tax. We will have the sales and use tax lottery with some significant presence throughout the whole island by the end of June 30th. So we have set up our calendar so that we can start, actually we did start already in the municipality of San Juan and Guaynabo, and we will be deploying those fiscal devices throughout the island, and we will have a significant presence before the end of this fiscal year. That's one of the reasons that we may see, or we may have been experiencing, a significant increase in collection of sales taxes. Merchants that were not complying with the law have seen that we are closer to getting to them, and they have started reporting to make up, obviously, so that when we install the fiscal device, that they don't show huge increases in their sales. We have also implemented a very effective tool to monitor compliance. We have set up the hotline for sales and use tax. Has been very effective, especially with consumers and other merchants, which is particularly interesting. Is people tend to think that it's only the consumers, but a lot of merchants are reporting other merchants that are not complying. As of today, we have received, and this has been in place only for 3 months. We have received 447 complaints that are valid. Obviously, we also received some complaints that we have to, have no substance to it. We have investigated 169, and we have imposed close to $1 million in fines. In terms of other compliance measures, we have been very aggressive with them. We have a program of voluntary disclosure that will be in place up to June 30th. That basically is a window that we have opened, knowing that we have deployed a very just and equitable tax system. We have opened the window for those people that are outside the system or are within the system but are not complying with it 100%. under the voluntary disclosure program, you can report your income that has not been reported, and you can make adjustment to your tax return if you have taken, and this applies mostly to corporations, if you have taken positions that can be deemed extremely aggressive, and if they would be subject to audit by the Treasury Department, you would end up with an additional tax liability. You have the opportunity now to amend those returns or to declare, report those income that you have not been reporting, and you would pay a special tax of 20% without the imposition of interest penalties or be subject to either civil or criminal charges. On the other hand, if you do not do that, you will be subject to 200% of the interest if you are found that you have been underreporting income, or you have been taking aggressive positions that cannot be sustained if they were under an audit. You will be subject to a 200% of the interest, 200% of the fines, and you would be subject to criminal and civil action. So we have the positive encouragement, and you also have the very sort of the negative encouragement to comply. So we have developed many sorts of compliance. We have been reporting people that have not been complying with the tax to the credit bureaus. We have been making field operations. We have made so far 42,000 visits to merchants, either for income tax violations or for sales and use tax violations. We have also set up a compliance call center that have been very effective. So far, we have sent notices to taxpayers totaling a tax assess of $1.8 billion. We have received and generated 33,000 calls to taxpayers. That's making either collection efforts or making calling the customers to set up payment plans. Out of those, we have so far, up to March 31st, we have actually collected cash for $29 million. Plus, in addition to that, we have set up payment plans totaling taxes due in the amounts of $22 million. In terms of our fiscal audits, we have also been very active. As on the table, you will see the effects, how many cases we have been processed, and the amount of taxes that have been levied against these taxpayers. As you can see, there's a significant increase on our efforts and our efficiency of our teams. We will continue to do that. We are strongly using technology to detect those taxpayers that deviate significantly from the metrics that we have set up. For example, we can set up metrics for industries or professions, and we compare the tax return of those either industries or professionals, and see how much they deviate from the standards. And basically that raises red flags that for those taxpayers that are deemed to be of high risk of tax evasion. We are complying, as we mentioned last year. We are a strong commitment to increase our staff of auditors on the field. We have had, so far we have had net we have added 366 auditors to our team. Obviously that complements our efforts, compliance efforts, using technology. So in general terms, we are committed to continue to provide you timely information, specifically in the terms of the filing of the comprehensive annual financial report. We will be successful in leading the implementation of the most comprehensive tax reform in the history of Puerto Rico. We will continue to focus in increasing tax revenue base by enforcing tax compliance and addressing tax evasion. At the Treasury Department, we are staying the course and we are delivering concrete results. Thank you very much.